I'm definitely a ready, aim, fire. I need no information to act. Hey, Jimmy, jump out of this plane. Like, it was a great asset in the military. It has its pros and cons when it comes to investing and building wealth. Alrighty, welcome to the first episode of the Main Street Patriot podcast. My name is Jimmy Vreeland. I will be your host of the Main Street Patriot podcast. This is in conjunction with Vreeland Capital and Ranger Real Estate. We'll get into what those are a little bit later. So as I was planning out with my podcast producer, Jake, he was like, you know, Jimmy, you talk really fast. And then he listened to some previous podcasts I've done, and it's great, but we probably need somebody to slow you down. So with me today in studio is my man, Daniel Jacobson. You guys can refer to him as Jake. Jake, why don't you introduce yourself to everybody?
Hey, how's it going, everybody? Yeah, this is Jake. I've been in real estate since college. I'm excited to learn from Jimmy today. I love his message. We've been doing the podcast studio here for the last year, building out of our own podcast. Happy to be here with you today, Jimmy.
Give your company a plug. What's your podcast company?
Yeah, Doorwood Studios. We service all folks here in the real estate industry, the real estate investing industry, all the different niches from short-term rentals to everything else. We can also help you out with websites, online course creation, managing, Kajabis, anything you need.
So yeah, Jake actually met me, came up to me after I did a public speaking event around St. Louis. So what are we going to get into today? So I have a real estate course, and this is a little awkward. It's like, hey, Jake, we're going to have a podcast about me, about my background. And so now that we got the awkwardness out of the way, the reason I do this on the course and we're going to do this on the podcast is so you just have a brief introduction of where I'm coming from. And so, by listening to this podcast, you're going to get valuable information. And from somebody who has been in the trenches, someone who's has done over 1,000 deals, and kind of, most people are interested in that type of origin story. Like, hey, how did it happen? And also, you're going to know that I'm not just some real estate guy in his parents' basement in a bathrobe and underwear opining about real estate. Like, I've been there, done 1,000 deals, know what I'm talking about. And so, because as I was driving over today, I checked my Instagram feed, and I saw a guy talking about real estate who was like done 3 deals. So, I'm sure guys who have done 3 deals can do interesting podcasts, but maybe not that much value. Don't have enough experience to provide that much value to the listener. So that's my diatribe on what we're going to do today. So where do you want to start here, Jake?
Yeah. So I love your background. I think people want to know, like, how did you get into real estate? Can you tell us, like, do you wake up one day, decide you want to get into real estate? What's the story there?
So, yeah, actually I read, and I know this book has fired up so many people to get into real estate, but I was, at the time I was in the Army, and I was on my first deployment to Iraq, and I read, my mom used to send me videos, and it was DVRs back in the day.
Oh, yeah.
Of, what was ever on TV. Like, I first started watching I'm going to date myself. This is like 2005. So I remember getting DVRs of The Office, and that's what we used to watch in our free time. So she sent me this little purple book. She's like, we need to try this. And it was about real estate and Rich Dad, Poor Dad. I think she had saw Kiyosaki on Oprah. Not a lot of people know this, but he first exploded after going on Oprah.
Oh, sure.
And so I would go out on patrols, I would come back, and I just could not put this little purple book down. And I was like, oh my God, I gotta get into this. And so I came home from mid-tour leave, and my brother was in medical school at St. Louis University at that time.
Yeah.
And we just started looking at houses, and we just started buying houses. So not a lot of people know this about when you're deployed in the military, but if you have money problems, it's a great way to solve your money problems. So, for example, I was like 23, 24, and I was going out a lot and partying a lot. So I left for Iraq like $10,000 in credit card debt. And when you're deployed, you can't spend any money because there's nothing to spend money on. You get combat pay. I got jump pay. I got hazardous duty pay. So you also get these major pay bumps because you're deployed. So I was making good money. Couldn't spend any money. And so I would just send all my money back to my mom and brother, and we started buying houses.
Wow.
So that's how the journey got started.
Yeah. Yeah. How did you start that? They found properties?
So we got an agent, and then they started walking houses. And I'll never forget this, because as people complain about their 6 and 7% interest rate they have now. So this is like 2005, 2006. I'll never forget my mom saying, interest rates are at 6%. We got to buy now. They're never going to be that low, that low again. And so just a little bit of perspective for people that even, between the market crash in 2008 and 2020, like we were spoiled on interest rates in a big way. Like right now, we're talking January 2025, where the interest rate is like 7 is like average for the last 30 years.
Mm-hmm. Yeah, it puts in perspective for people that kind of got used to the 2-3%.
Yeah. And then during that time when I was selling houses to investors, I'm like, dude, don't get used to this. Like, you are buying paper. You're getting discounted paper right now. Don't get used to this. Like, but get many houses as you can at this point.
Yeah. So I want to go back to the Rich Dad, Poor Dad. What was it about that kind of woke you up?
Growing up, I thought the only way you could be wealthy was to be like an inventor, to be like a famous actor, or to be an athlete. And like, I was a failed high school athlete who I did play in college, but like, I always grew up wanting to be a professional athlete. Like, that was out. I definitely wasn't smart enough to invent anything.
Okay.
And then I definitely was not going to be famous for like acting or anything. So it was like, oh, how could I ever be wealthy? And it's like Kiyosaki breaks it down is that, to grow wealth, it's pretty simple. You buy assets and, spend reasonably. And then over time, it's almost inevitable that you become wealthy.
Yeah. Wow. And so you started building a portfolio right there in Iraq.
Yeah. And then the other thing, now that it's 20 years since I read that book, but the other thing is that there's poor mindsets, middle-class mindsets, and wealthy people mindsets. And, wealthy people work to learn and do things to learn, not necessarily work to spend. So, I mean, the book is great. So, and I know it's fired up and started several entrepreneurs.
Yeah. Were you always doing real estate, or did you ever like invest in other assets?
Yeah, we can talk. We'll get later into my story.
Okay.
But as I was trying to get out of corporate America, I was doing some cowboy stuff.
Okay. I'm excited to hear about that. I'm sure everybody will be.
I'm definitely a ready, aim, fire person. Like I need about a little bit of, I need no information to act. And that was like a major asset in the military. That was awesome. Mm-hmm. Hey, Jimmy, jump out of this plane. Cool.
Yeah.
Hey, do this. Like, any information there, boss? No, just go do it. Like, it was a great asset in the military. It has its pros and cons when it comes to investing and building wealth.
Okay. Awesome. Well, I'm so excited to get into that later. Sounds like how that played out. So can you talk about basically how you got from there to Vreeland Capital? Like, what was that journey like?
Yeah, so I probably left. I deployed 2 more times after that deployment we're talking about. And the other thing that attracted me about the Kiyosaki story is he was a Marine helicopter pilot in Vietnam. And so instantly I'm like, oh, wait a minute. If another veteran can do it, then maybe I can do it. And so Kiyosaki, when he got out of the Marines, his rich dad told him to go get a job in sales. And I left the military probably with 5 houses. So in the next 2 deployments, we kept snagging about a house or a house and a half a year. And so, one of the great lessons from Kiyosaki is work to learn, not to earn. And so I knew if I wanted to be an entrepreneur, a business owner, I needed to learn to sell. So it was like, all right, cool, let's go learn to sell. And then when you get out of the military, there's a bunch of headhunters who hook you up with jobs. And so I knew I wanted to work in sales. Didn't know what I wanted to sell, but the headhunter was like, hey, your brother's in medical school. He'll teach you everything you need to know. Why don't you sell medical equipment? And I was like, okay, cool. And then luckily I got hooked up. I played football at Army. There was an Army football player who was a branch manager of Stryker Orthopedics in St. Louis. And so he hired me right away. So it was like, didn't know what I wanted to do. Kiyosaki said, go learn to sell. I went and learned to sell.
Yeah.
And so I did corporate sales for 8 years. And so I got out in the military in 2008, met my wife in 2009, got married in 2009. Our first child, Maria, came in 2010. But December 2010, Bubba came, January 2012.
Wow.
Tommy came 2000, and Johnny 2015.
Wow.
So
Fast and Furious.
yeah, things right out of the military. Like I said, I'm ready, fire, aim. And like my wife is almost as crazy as I am, but she is a leveling influence.
Okay.
And so when I was learning sales and everything, like corporate sales was awesome, but eventually it started to stall out. And then I still had this Kiyosaki idea in my head that, hey, buy assets with your extra cash. You know, he sold it as build up your passive income so that when your passive income equals your expenses, you're essentially wealthy. That was another takeaway from the book. I have a certain amount of issues with that idea that we're going to get probably episode 2 in the podcast. At that time, I was still buying about 2 houses a year.
Yeah.
So we're recording this in St. Louis. The main market we work in is St. Louis. And then there was this place called the Missouri Athletic Club where I was playing a ton of basketball.
Sure.
And there's a lot of money rolling around Missouri Athletic Club.
Okay.
And so people are like, hey, how can I get started in real estate? I'm like, well, you need to, whatever you're doing with your network, like talk about what you want to do. But there were people 10 years ahead of me in the game who had invested in real estate and that's all they did. And those were guys I was playing basketball with. So there was one guy, I just hung around him. His name's Leo. Big shout out to Leo. But I mean, I was bird dogging for him. I remember like there was auctions and I was bird dogging those houses for him, but I got my first realtor. I got my first private lender. Leo showed me how to do it. Everything was done through basketball at the MAC. You want to hear a funny story of how I started getting private money?
Yeah.
So this was how I was looking to get lenders. And so at the MAC, there's like on the 5th floor, there's like beach chairs out all the time. And there's these bunch of old guys around 11 o'clock, they take naps.
Okay.
And so with medical sales, it was stressful some days, but it was not stressful. If I didn't have surgeries,
sure,
I would, not have that much to do. So I'd go play basketball in the morning and then I'd go take a nap with these guys. And then eventually after I took enough naps with these guys, they were like, oh, he must have money too. I mean, I didn't have anything, but I'm like, oh, I'm a real estate investor. And so then they started getting interested and then they were willing to lend me money to go buy houses.
That's amazing.
But it all started with napping at the MAC.
This is the one over the Pear?
The one downtown.
Oh, okay, the one downtown?
Yeah.
Nice.
And so I was still buying 2 houses a year. I didn't realize it until but it was about 2 houses a year. So between 2005 and 2015, when Johnny was born, I had 20 houses. And now as far as getting the cash flow up so they equal my expenses, like nowhere close. But my balance sheet was growing. Like I was definitely getting wealthier, even though it didn't look like it or feel it. Like Kiyosaki also talks about, you got to understand your net worth. We could probably do an episode on this with your balance sheet, your assets versus your liabilities. But if you look back, every time you have a kid, your expenses go up.
Yeah, it was absolutely.
Yeah. So like any young fathers or young parents out there, like whenever we would have a kid, my income would go up because I was scared. I was terrified and I would just start working harder. And so it was like, we would have a kid and buy 2 more houses, have a kid, buy 2 more houses. So by the time Johnny was born, we had like 20, close to 20 houses. And then I didn't understand the impact of having 20 houses at the time. But you asked earlier, what else did you invest in? And so in my 8 years of corporate, like the first 4 were super awesome because I was learning and growing. But the back 4, since I wasn't growing anymore, I felt kind of stuck. It wasn't anything the corporation did. It was just when I first showed up at Stryker St. Louis, we had nothing, like no market share, nothing. And so I had a super amount of fun in the growth part.
Yeah.
But once it was like steady state operations and like just being there and like maintaining it, it was boring. And so when I get bored, I get very anxious.
Okay.
I get very juvenile, very childish.
Impulsive?
Yeah, the worst part of my personalities come out.
Okay.
So I always need to have something to chew on. So like, for example, 2025, the thing to chew on is podcast.
Nice.
But if it was just, if I was going to live 2025 like I lived 2024, I'd start getting anxious. I'd start tearing things down instead of building up. Like that energy's got to go somewhere. And so that was kind of an aside.
Yeah.
Oh.
Well, you talk about your the fire, or ready, fire, aim approach, right? So, looking back, like, was that the way to do it? If somebody's getting into real estate for the first time, is that like, what do you think? Like, would you change anything about your approach?
I just think that's the way God made me.
Sure. Okay.
I don't think so. I'm sure there's some people who are high fact finders, and I think they should invest the way a fact finder should invest.
Sure.
You just got to make sure whatever your predominant tendency is, make sure you have someone in your network who is not, who can guard you against that. So, now that we have Vreeland Capital, I got accountants, I got bookkeepers, I got people who balance that part of my personality.
Yeah.
But like, if I were to say like, everybody should be a quick start, ready, fire, aim, and invest that way, if that's not your personality, that's not going to work.
Okay.
Now, I mean, a lot of times when I'm building people their portfolio, I work with a lot of highly conscientious, successful people.
Yeah.
And then, generally conscientious, high fact-finding people are successful and high income earners. And so I sometimes have to help them get out of their own way.
Sure.
And be like, hey, you've done your due diligence. So a high fact-finder person, I just say, hey, what is your buying criteria? What's your due diligence? Write that down. And once you've satisfied that, it's time to move. Because, my tendency is to move too quickly. Other people's tendency is to move too fast. And so to answer your question,
You're slow.
Yeah.
Yeah.
To answer your question, I didn't have any other options. It's just the way I'm built.
Yeah. Yeah. No, it makes total sense. I like that everybody should operate according to the way that God made them. That's how they can succeed.
Yeah.
Leveraging their strengths and talents.
Dude, if you're going to fight your natural hardwiring, you're just going to be miserable. And so, a little bit of the military was fashioned to a quick start, but a lot of it was not. And so that's why I always knew I probably wasn't going to be a career person.
Okay.
And
in the military, you mean?
Yeah.
Yeah.
Because as you get older and slow down and are less active, like you have to be more of a planner and more of a part of the bureaucracy, that's the way. The reason it is the way it is that as you get older, you do more staff positions.
Sure.
And that wasn't for me.
Yeah.
But, back to other things I invested in. And so, Kiyosaki.
Cowboy days.
Yeah. And it was cowboy days. But Kiyosaki also talks about oil wells. Kiyosaki talks about multi-level marketing. So what else were all the dumb things I did? I did oil wells. I did multi-level marketing. I was trading options. I'll never forget like picking my daughter up from like pre-K4. So she's like 4-year-old and the markets close at Friday at 3. And I had to pick Maria up at like 250. And I had a couple short options in. I was like, oh my God, please don't drop. Please don't drop. And they dropped like right before I pick her up. And I lost like 10 grand, like boom, like that. And so not that option trading isn't great. People make millions options trading. It's just my personality wasn't built for that. And then a lot of people and the other thing is like, I was also had a high paying W-2 job. And so I'm trying to take care of these doctors. And then I'm also trying to trade options. Like it was a diffusion of focus. That wasn't good.
Right.
So Kiyosaki talks about the rat race that, your expenses go up, your income's not keeping up. And so that you're kind of stuck.
Sure.
And so there's that rat race, but I created another rat race for myself.
Oh.
I would hit my quota every year. And then I have this chunk of cash. And then I would just throw cash at an investment, hunting for this enigma that once your cash flow equals your expenses, you're wealthy. So I was doing anything with no system, no process, no context to build passive income.
Yeah.
And so all the rewards of my active income were being dissipated by this almost craze.
Yeah.
This to
kind of manic.
There you go. Panic to make passive income equal my expenses. And it was stupid. And so it was a second rat race where I would lose my bonus money. I would lose all this because so my breaking point was I invested in an oil well. And then I got a letter from the SEC and then it was weird. My quarterly returns weren't coming anymore. And then the SEC sent me a letter saying, oh, this oil well is actually a Ponzi scheme.
Oh, shit.
And so I was just like, I got to start doing something different.
Yeah.
And then I had a mentor of mine kind of look at everything I was doing. And he's just like, Jimmy, you are an unguided missile. Like this is a lot of activity. But so he looked at everything I was doing, and then he's like, what's going on here? Like, what are these 20 rentals? And he's like, they're kicking off cash flow. They're appreciating at least 5% a year. It's like your net worth is growing and growing. Like, why not focus only here? And then he's like, look, dude, when you're starting out, we could do another episode on this called the wealth pyramid. But essentially, when you're starting out, you only invest in assets that have the 4 pillars of wealth building.
Okay.
It's appreciation, cash flow, the ability to use leverage, and tax advantages. You only focus on those things, your wealth will grow immeasurably. Like whatever you're trying to achieve, it'll achieve there. And so this happened in 2015.
Okay.
And so after
the oil well incident, or the mentor looking at the
14.
Yeah.
I remember this. I remember it this way.
Okay.
14 was the oil well because that was like rock bottom. 15 was all right. Yeah. And then actually Johnny came in 16. Sorry, Johnny. Sorry, Susie. And the reason I remember this, so 14, the oil well, and I just focused on 4 pillars. And I was able to leverage my sales ability that I learned in corporate, which is a valuable skill. Like if you want to be wealthy, you got to learn how to sell, even if you're uncomfortable with it. Back to natural abilities, I loved it. Like the first time I got to sell something and made money just for talking to somebody and doing something for somebody, and they paid me, I was like, this is awesome. Like this is so much easier than earning money the way I earned in the Army. Like this is awesome. And so I've just always loved it and had fun with it. So I did private money. I did what's called the Burr method. Mm-hmm. Now, if you look at Bigger Pockets and you look at people are in real estate education already talking about Burr. And we'll do an episode on this, but essentially you can get an infinite return on your investment by you buy a house in disrepair. You're all into it for 80%. A bank will loan you 80% of the money. So for quick numbers, you buy a house for 50, rehab it for 30, you're all in at 80 grand. The house is worth 100. The bank will lend you 80% of the appraised value. So the bank lends you 80. So they lend you all your money back. And so you're into a house for none of your own cash.
Right.
And so 2015, I partnered up with another wholesaler, and I was able to buy 60 houses in 2000.
Wow.
Sorry. Yeah. 2016.
Yeah.
And so Johnny came in September. And so by 2000, I was up to 80 rentals in 2016, just because that one year I figured out how to raise private money. And so the reason I remember this, because Johnny came in 2016 and I took a day off from work, and there was a doctor who I left my trainee with my main client. And I'll never forget, like, holding the newborn Johnny in my arms, and the kid had messed up. And I got the doctor calling me, bitching at me. And I'm just like, of course, like I feel helpless. I'm stressed.
Yeah.
I love my wife for a lot of reasons, but here's why I always love her. She's like, you should just quit. She's like,
wow.
She's like, it's time for you to focus on the real estate. And like, what wife out there, after Maria was still 4 when Johnny was born. So what wife out there would actually say that to their husband? And so, another reason I've been able to do all this, because Susie is absolutely, like I said earlier, almost as crazy as me, but a leveling influence.
Yeah.
And so, she was all about starting her own thing.
Wow. Okay. So that was what kind of flipped the decision to go full time into real estate.
Yeah. And it's not like I walked out of that hospital room with the kid and was like, I'm out.
Yeah.
But like,
there's a transition.
Mentally, I was just like, I'm going to ride this out as long as I possibly can.
Okay.
The corporate, the check and everything. In retrospect, I wish I would have wrote it out for about 18 months longer.
Okay.
So here's why. Part of that burst strategy, I was going to commercial banks for my lending. And so when I had a job, even though I didn't know what I was doing, I had no systems, no process, no team. As long as I had a W-2, they'd lend me money. And so that's why we were able to flip the burst so fast. But now when I left corporate and no longer had a W-2, the next round of burrs I went to, the bank said no. I was like, huh? I was like, dude, I know what I'm doing now.
Right.
To figure out, but they're like, you don't have a W-2 anymore. So what I think happens on Instagram is there's all these people like, I'm an entrepreneur, me. I'm a business owner. This is awesome. Me. And then I've seen this with my own investors is the investors feel bad because they don't have a cool Instagram thing, right? But they're much more bankable. And then they're able to build their wealth faster because they have active income and they're bankable. Like I took a 2-year backwards, like scrounging, paying usury level interest rates because I was no longer bankable.
Yeah.
And so that's where I like people who are investors, like I try to, like, they're business owners, they're high earning professionals. I'm like, real estate amplifies your wealth. Like, don't take your eye off the ball for what you're currently doing so you can have a wealth amplifier. And this is where that whole Kiyosaki passive income thing is like, I work more now than I did when I was in corporate, and I love it. And I have a ton more fun, but it's like, it's active income. And I just still do the same thing I do. I take my active income every year and I buy assets.
Sure.
And then, or I invest more in my current assets, which are the businesses I own.
I know you want to get into some of that in the next couple episodes.
Yeah.
I think what I would love to know is, in a sense, by you going full-time into real estate, and now as I understand it, you help other people to be able to do this who don't have the time or it doesn't make sense for them to go full-time into real estate. So how do you get from your mentor understanding that you haven't been using the 4 pillars, learning that, leveraging that? How'd you go from there to all of a sudden you're helping all these people? It wasn't all of a sudden.
Yeah, this is where it kind of gets kind of fun. And so 2017, do the same thing. Hammer out another 60 burrs.
Mm-hmm.
So it's 2000. This is kind of a funny story too.
Okay.
And so it's like 2017, I'm over 100 houses. Like, 100 houses. I'm like, I'm awesome. And then like I say 100, everybody's like, whoa, that's awesome, right? Even though no systems, no processes, no team. And then, dude, I was able to rack up $5 million worth of debt in 2 years. Ready, fire, aim. I mean, I can sell. So I was able to sell people on investing with me. And so I think they bet the jockey, not the horse. I think they knew. I thought I had it figured out. I think they knew I hadn't figured it out, but that I would figure it out.
Sure.
Like my main investor who lent me $1 million, he's still with me today. And like there were times where I was like, oh my God, like I don't know if I can pay this guy back. I better figure this out.
Yeah.
And so, by the grace of God, figured it out. But he's even told me, he's like, I knew you'd run into some times where there's a pinch and you figure it out.
Sure.
And so then I'm listening to a bunch of Dan Sullivan.
Where does that come from? Why did he trust you?
I mean, he knew me growing up.
Okay.
And then I think the military thing.
Yeah.
This is kind of he's a big developer around town. And
Okay.
then I knew when I was interviewing coming out of the Army, it was 2008.
Yeah.
And so he was my first interview. And he's like, Jimmy, I think you're a great guy. Thank you for your service. But he's like, if I hired you, I think I'd be doing you a disservice because the market is just so bad right now.
Mm-hmm.
And so he was my first interview, and that's why, but we always kept in touch, and then he saw what I was doing. And so the other thing, as he's lending me money, he's sitting down with me quarterly and helping me out. And like, try this, try that, which is pretty cool. He didn't
That's
need to do
amazing.
that.
Yeah, sure.
But he was protecting his
vested interest for sure.
So then I'm up to 120 houses, and I'm listening to Dan Sullivan a lot, strategic coach, and Joe Polish. And so if you ever want me to give you money, here's what you have to do. So I'm looking to expand, and I'm looking to mastermind and learn. And Joe Polish on the podcast is like, come to my Genius Network. And so I go to their website, like Genius Network, like, what is this? And this is a mastermind for marketers. I wasn't a marketer, but him being the good marketer he does is everybody's a marketer. So he put it out to everybody. And he's like, are you good enough to be in this group? And I'm like, yeah, I'm an Army Ranger. Of course I'm good enough to be in this group. And so he's like, if you think you're good enough, click the next button. I clicked the next button. And he's like, prove it. And click this button to prove it. So I clicked the next button. He's like, get out your credit card and pay me 10 grand and come to Genius Network. And I was like, of course I'm good enough. So I swipe my credit card. This is 10 grand I didn't have at the time. And so I go to this Genius Network mastermind for marketers, and I felt like a fish out of water. Now, this is a moment of like providence or whatever. If this moment doesn't happen, I don't know if Vreeland Capital happens. But to start out the event, they like stand up, shake the hand of the person next to you. The person whose hand I shake is a man named Jason Medley, another mentor who's been a great mentor of mine, but he owns the Genius Network. Genius Network is a active real estate owner, active real estate investor community and mastermind. And so to be in that room, you had to be doing 100 deals a year. For most of that, people, it meant 100 flips or 100 wholesales.
Okay.
But I was just a landlord. And so I feel completely out of place at Genius Network. Jason, I find out later, he doesn't want to feel like he's sniping clients from Joe Polish. But once I realized I needed to be in his room and not Joe Polish's room, I just put my sales hat back on and I just followed Jason around the entire weekend. Like, hey, how do I get into Genius Network? And eventually sell myself in.
Wow.
And so then that's in the month later is Genius Network. And then Collective Genius, I call it, we'll do another episode on this, but it's called the CG slap. You know, a lot of times when you go to a mastermind or a public event, you want to talk about, put your chest out, talk about how awesome you are. And so I thought I was pretty awesome in 2017 because I had 100 rentals. But like I said, they were poorly managed lease option rentals. And so I roll in this room being like, hey, I'm awesome. And maybe there was some awesomer people than me. And then I just got destroyed in this room. Like, what's your accounting system? What's your operating system? I had none of these things. Like, do you feel like you're running around with your chicken, like a chicken with your head cut off? Yes. Like every mistake a new business owner makes, I was making. And luckily they were caring enough to point out my mistakes and then show me a way through. And so
A different way.
yeah, they're like, dude, you have no accounting. Here's how bad my property management was. I was paying other landlords that we managed property for, not even checking if their tenant had paid. Just I didn't want them to bother me. So essentially using my own money. And so they helped me with everything, especially get me going with EOS, Entrepreneur Operating System.
Yeah.
And so then eventually, this is where we'll talk about this maybe in the next Kiyosaki episode.
Okay.
So Jason comes up to me. He's like, you have 100 rentals. What do you do? And I was like, what do you mean? Once your passive income equals your expenses, you're done. I'm retired. And he's like, no, you're not. He's like, you have $5 million worth of debt. You have to pay these people back. He's like, bro, you got to I understand you have passive income. You got to find an active income. And so I don't think in the real estate education space, I think the educators make people who have active income look down on it and say the only dollar that counts is dollars made in real estate. And I think that's stupid. So I believe the correct paradigm is active income and passive income. And to be wealthy, you got to have both. So Jason always says active income comes after hyperactive, active activity. And so he's like, dude, you either got to start wholesaling or flipping houses. So then luckily, what was hitting the scene right now is passive investors wanted to buy already occupied houses called turnkey. And so I was able to, people in Collective Genius showed me how to start turnkeying properties to investors. And so I think end of 2017, we sold 25. 2018, we sold 100. And then 2018, I worked with another education company with two partners. We've since split amicably, but so I could focus more on the real estate and they wanted to focus on other projects. Yeah. And so from then on, 18, 19, 20, 21, we sold at least 100 turnkey houses to other investors.
Amazing.
Yeah.
So these are the folks that want to know they need to build a real estate portfolio, don't have the time to do it, and are willing to follow your advice to do it in a passive way, but in such a way that they kind of like follow that passive income paradox, did you call it?
Yeah, we'll do another episode on the passive income paradox. But basically, once you do something often enough, you're able to streamline it for newbies. So we'll hook up you with the lenders, hook you up with the accountants, hook you up with the deal, hook you up with everything you need to know so that as a busy professional who doesn't have the time, pretty much you don't have the time to rehab, you don't have the time to manage, that's the big stuff. The big stuff you don't have time to do is manage the rehab and then manage the tenant. And I was doing this and had a corporate job. It was stupid. Like I would say I was taking $150 an hour call for a $5 an hour call to talk to a tenant. Sure. And I was just like, wait, this doesn't compute. Mathematically, it doesn't make sense. I need to have a property manager.
And it took that the mastermind that you joined to point all that out for you. Yeah. And that's what allowed you. So that was at your point that because light got shed on you, that's what enabled you to actually build the company you have today?
Yeah, before that, I was doing everything like slowly because I didn't had anybody who had been there before.
Mm-hmm.
And so it took me forever to buy one house.
Yeah.
Now our clients, I got clients, I send an email, they're on a plane on a layover, they're buying houses like right then and there because we hooked them up with the deal, the lender, and the construction company.
Yep.
And so, we've done it 1,000 times, so we've streamlined everything. So my goal is for a high earning business owner or 1099 or W-2 who knows they need to start building wealth in real estate to work with my team to do that.
Sure.
And then the other thing at CG, it also showed me how to start building a professional team. Because before, when you're new in a business and just hustling,
yep,
and then it's like a genius with 1,000 helpers, that's not a team.
Right.
And so we were able to, hire on real talent, hire on great people. And now it's like, hey, my team is going to help you build a portfolio. Because, we just went through, how long have we been doing this? 30 minutes of my past mistakes. You don't want me alone controlling your real estate portfolio.
Sure.
Now, me galvanizing and leading a team to help you build your real estate portfolio, I think I have a decent resume to say,
absolutely,
hey, I kind of want Jimmy to be doing that.
Right. He's going to make it happen.
Yeah, the team's going to make it happen.
Sure. Yeah, fantastic. So, obviously, we're going to get into a couple of topics that we talked about in the next couple of episodes. What do you want your people who are listening to this podcast, if there's one thing that you could tell them about your background, what would that be?
Make a lot of mistakes, but learn lessons very fast and implement the corrections even faster. And here's what I think we should add or end episode 1 is.
Yeah.
So there's a lot of, I hate the word misinformation. What are your thoughts on that's like the new 2024. If you don't agree with somebody, what Jake just said to me, I don't agree with him, so it must be misinformation.
Right.
So
right.
There needs to be a better word, but whatever that word should be, that's what it. So if you know you need to get into real estate, I think you go to Google, I think you go to YouTube, and I think it's massive confusion because I think every influencer is telling you need to stop what you're doing and start looking for burrs yourself or start looking for flips yourself. And I'm just like, that is not the way to do it. So I had another mentor, Jerry Norton. He explained it like this to me. So Jerry, he educates newbies. He educates newbie wholesalers and flippers who want to do it full time. And we were sitting on a houseboat in Lake Powell. It was an awesome trip. We were explaining who the clients we serve. And I was like, Jerry, in your opinion, who should be flipping, who should be wholesaling, and who should be buying assets? And he's like, oh, that's simple. People who have a cash machine should be buying assets. People who don't have a cash machine should be flipping and wholesaling. So what does that mean? What is a cash machine? I think a cash machine is anybody making over $200,000 and above. Like the most effective thing at that income level, the most effective thing you could probably be doing is pushing your K to 225 to 250. Like it's probably the most efficient way for you to keep making money. And so not to say that business ownership wouldn't be in your future, but you got to max out what you can do as an active income.
Sure.
And it's faster. Like I said, I probably took a 2-year quitting. When I quit slowed me down by 2 years for sure. Probably financially it took me 5 years to catch up. But I had a cool Instagram thing where I said I was a business owner. So if you have a cash machine, you need to be buying assets. You need your active activity. You need to augment that with passive assets. Because remember, passive income comes after hyperactive, active income and activity. So if you're already on that cash machine side, invest passively. Grow what you're currently doing. If you don't, those are the gurus who are great for learning to flip, learning to wholesale. Like I could probably teach both. It just bores me. Like it's just not that interesting and fun.
Sure.
And so that's what I see as a problem with the real estate education space is you got all these gurus saying being a flipper and wholesaler, but a flipper and wholesaler does not fit for everybody. Like, if it's not part of your unique to wholesale, you have to be absolutely insane. And here's a version of insanity. So we just got done with Christmas and my acquisitions managers were off. So I was like, cool, I'll run some appointments over Christmas. So it's like I'm coaching my kids basketball and I love, as you can probably tell from the podcast, I love being busy. And so It was an awesome day. I got done. I started the day. I did my, some computer work I needed to do, took the kids shopping, coached the kids basketball practice, and I had like a 3:00 appointment. And so I go on the 3:00 appointment and I get the contract. And I was so excited about getting the contract. I was excited as today as I was getting that house in 2005 in Iraq. So like there's a certain amount of insanity in that. And like my kids were in the car and like, they're like, Dad, did you get the contract? I'm like, of course. And so
That's awesome.
that's a little bit of a tangent. Like to wholesale, you have to be crazy. You have to love it and be nuts. And not everybody's going to do that. Like I've sold 14 houses to an executive at Google. He would be a horrible life and business decision for him to start wholesaling.
Right.
He
Right.
just sold him the houses. And he's
Yeah.
gotten everything he's ever needed out of real estate by that because he has a cash machine.
Sure.
And so,
Right.
but if he were to go to the internet, start investing in real estate, he'd be getting a bunch of pop-ups to start wholesaling and flipping.
Yeah. Yeah.
And so,
Running around town, putting bandit signs or trying to get postcards out, and it'd be an idiotic move for him to make. So,
yeah, but now for some kid out of college without a cash machine,
sure.
that's a brilliant.
Yeah.
And so
Yeah.
that's where I've tried to separate. I've tried to cut through that noise and be like, that's the client I'm trying to serve. That's who I want to work with.
Right.
And so, and then if people come to me, they were like, Jimmy, do you want to teach me to wholesale and flip? I was like, no, but I'm friends because of Collective Genius. I'm friends with all those guys who can teach you that.
Yeah.
And so that's who we're trying to serve. That's who my team loves serving. And I hope that's who this podcast serves.
Awesome. Awesome. Well, thank you, Jimmy. Thanks for, like you said, it's kind of awkward to have to do the podcast about yourself, right? And, give the whole story.
Yeah.
But I
It's
think
definitely been awkward me just doing it alone. So thank you.
no problem. Happy to do it. I think that for all the listeners, it's great to know the whole story, right? From Iraq to the mistakes that you've made to the building of the machine that can serve them if they're the ones that are trying to build that passive portfolio whilst they continue their cash machine career that they already have and are enjoying. So that's fantastic. Thanks for doing that for everybody. Excited about the next episodes. Do you want to
So
make
the
any
next
plug here?
Yeah, the next episode we're going to record is financial freedom is bullshit. This should be a fun.
Here we go. Hot takes coming.
So as a call to action, now this is a new podcast, so we're figuring this out. We're go. So as a call to action, I have a free Facebook group that you can come join.
It's awesome. It's like 8,000 people in there.
Yeah.
Very active. I see posts all the time.
Yeah. So how do we get people onto that? I guess we'll put a link in the show notes.
That's right.
How to join the Facebook group. Also, I have a free course I'm giving away. And so we'll put up a website in the show notes and get you guys the course that way. It's also in the free Facebook group. And then also, if you want to start getting investing, we'll also have a link in the show notes for you to schedule a call with a team member of mine, and he'll see if you're in the right spot where we can start helping you build a rental portfolio.
Awesome.
That was
Definitely
a crazy dynamic call to action. We'll definitely get better at that on the further episodes.
And share this episode with somebody that you think needs to hear it. If they are that high performing professional, give us a like, give us a follow on the socials. I think Jimmy's got amazing.
My Instagram and YouTube is Jimmy Vreeland. So put in
That's right.
Jimmy Vreeland to YouTube, and we'll also put a link in the show notes. But
exactly,
trying to build up the socials as well.
Yeah, exactly. I'm really excited, Jimmy, for the message that's coming out of this podcast, and that's really going to become clear in episode 2. And so people need to hear this message. I love the way you put it. This is an amazing time to be in the market. So,
well, that's the other thing about real estate. Don't buy. It's always a great time to be in real estate. Don't wait to buy real estate. Buy real estate and wait.
Awesome. All right. See you next time, guys.
All right. See you guys. So if you like what you heard today and you want to learn more, sign up for a discovery call with one of the Vreeland Capital success coaches at jimmyvreeland.com.